Hi there, welcome to Kneppy Invest. 1 year ago, almost to the day, I requested from you, the viewer of this channel, your favorite stock picks for 2023. I said you can choose as many as 20 companies. And then I collated their results, and there were a fair few companies that were chosen, about 100 or so. And then I decided I was only going to include those companies that were chosen at least twice. So some companies were chosen 4 times, some companies 3. Majority of companies chosen either twice or once. And then those companies that were chosen at least twice came out to 30. And then I did a video on your 30 companies. And in today's video, we're going to go back and see how those 30 companies performed in 2023. Did you make good choices, or were your choices bad for various reasons? So also, at the end of the video, what I'm going to do is just assume that you bought, or someone bought, all 30 of these companies equal weighted. Maybe I shouldn't have done equal weighted. Maybe I should have put more weight to those companies chosen 4 or 3 times, but 30 companies equal weighted. And then we can see how those 30 company would have performed as a portfolio. So let's get stuck into it. And the first 2 companies we're going to have a look at are those 2 companies that were chosen 4 times. There's a spider web there. Those companies that were chosen 4 times, and that was only 2 companies. And interesting 2 companies, Ordinate and A2 Milk. And funny enough, at the beginning of the year, I owned one of these companies and did not own the other. And by the end of the year, the company that I did own, I sold, and the company I didn't own, I bought. The company I sold was A2 Milk, and the share price of that company down 37.8%. I should also mention these share price movements do not include the last 3 days of trading of the financial year. So that does not include the 27th, 28th, and 29th. So there is potential that one of these companies, or many of these companies, might have gone up or down a significant amount if they released a fairly important announcement. Anyway, so I'm just assuming they did. So A2 Milk down 37.8%, but Ordinate had an absolutely spectacular year, and the share price of this company rose 112.8%. But it was not the top performer out of these 30 companies. In fact, the top performing company share price rose by over 200%. So it seems like right now, this portfolio of these 30 companies might have performed fairly well. We're going to have to wait till the end of the video to see the results. Now, onto those companies that were chosen at least 3 times. I think it was like 4 or 5 of these companies, and they included 2 mining companies, South32 and Santos. South32 down 19%, while Santos up 6.2%. Interesting enough, Santos was not the only oil company chosen by you. There's another oil company chosen, but that was down slightly. In fact, down about 6%, if I remember correctly. Another 2 companies that were chosen at least 3 times were Zero and Drone Shield. And both of these companies performed spectacularly as well. Zero up 56.6%, while Drone Shield up 72.7%. So at this point in time, it seems like that this portfolio of chosen companies will have performed fairly well, but there's some dark clouds on the horizon coming up soon. Next 2 companies, Pro Medicus and Neuron Pharmaceuticals. And here we see the best performing company in the portfolio of these 30 companies. It's not Pro Medicus, but Pro Medicus did fairly well, up 71.4%. And I believe the P ratio of Pro Medicus is now 160. I was having a look at it earlier today because I am a shareholder of this company. And I was just thinking to myself, just based on valuation grounds, should I sell Pro Medicus? Take my profits. P ratio of 160 is assuming a lot of growth for this company. But this video is not on Pro Medicus and the possible overvaluation of the company, but still a P ratio of 160. But the best performing company in this group of 30 companies is Neuron Pharmaceuticals. Absolutely amazing year. And the share price of this company up 202.4%. They did release a really good announcement a few weeks ago. The share price rallied fairly significant from that. Anyway, now on to 2 disappointing performing companies. Mesoblast down 63.6%. Alcidion down 49.7%. Now, I can't complain about Alcidion because I also chose that company among those companies I thought will perform best in 2023. But Alcidion has kept on disappointing the market. Another capital raising, while Mazablast had a really bad result announcement a few months ago, and that's why the share price of that company is down 63.6%. Now on to Telix Pharmaceutical and Clinuvel. Two companies I actually do own in my portfolio. One of these companies had a really good year. The other company, not so much. So Clinuvel down 26%. Would have liked to see that company perform a little bit better. But Telix Pharmaceuticals up 30.7%. Now, Telix Pharmaceuticals share price is quite volatile. So there is potential. The share price might rally 30% over the next 3 days. Who knows? Share price going up and down wildly. And I think the main reason behind that is because the value of that company is quite high, amazing revenue growth over the past few years. And I think the market's just having a hard time understanding the true value of Telix Pharmaceuticals simply because of the growth. Next two companies, now we're into some mining companies. These are two fairly small mining companies. In fact, I could not tell you what these two companies do, but for some reason, a few viewers of this channel like these two companies, BlackRock Mining and Hot Chili. One company did okay, the other company not so much. The company that did not go well was BlackRock, down 40%, while Hot Chili up 14.9%. I would have preferred if this company was called Hot Chili or Red Hot Chili Peppers. That would have been more interesting. There is a company called Metallica on the ASX, so why not name your company after a famous band? Just saying. Metallica did it, naming their mining company. Next two companies, Westar Industrial and Arafura. So we're getting into the bad part, the bad performers. Westar Industrial had a negative announcement a few months ago, I believe, and the share price of that company down 38.5%. While Arafura Resources is a rare earth. They're not in production just yet, if I remember correctly, but rare earths have gone down a fair bit this year, and that's why this company share price is down 65.6%. Not the worst performing company in this group of 30, though. So, yeah, there are companies that performed worse than this. More than 65.6% down. Is Cor Lithium one of those? So Cor Lithium and Sayona. So there were still some lithium bugs at the start of the year. Cor Lithium was chosen by more than two people, or at least two people, replying to my request, and Cor Lithium share price down 74.6%, while Sayona down 66.3%. So not looking good, the performance of these 30 companies, if we group them together, simply because of these mining companies down a fair bit. And then we get to Sierra Technologies. Should be Sierra Resources. Don't know why it's Sierra Technologies here. And Telix, another bad year for Sierra Resources, down 70.4%, but still not the worst performing company. In fact, Cor Lithium was not the worst performing company. There's an even worse performing company to come, while Telix is down 23.9%. Now on to one company that's performed fairly good, another company that was down a little bit, but not all that much, and that was Korea Energy, only down 6.8%, while Sandfire actually did rise, which did surprise me, up 27.4%, and that was a little pleasant surprise. Why pleasant? I have no idea. I just thought it was going to be down during the past year. And then we get to one of the worst performing companies on the ASX, and definitely the worst performing company in this group of 30. It's not Weebit Nano. In fact, Weebit Nano was up. It was BrainChip, down 75.8% for the year, while Weebit Nano was actually up 29.2%. Now onto a few more, I wouldn't say stable, better quality companies, we'll say. First one is Corporate Travel Management, and the next one is NextDC. And if I remember correctly, both of these companies performed really well over the past year. Corporate Travel Management up 30%, while NextDC up 48.4%. And I think NextDC was just off the back of maybe tech having a really good year, maybe, I don't know. And then we have Goodman Group and Domino's Pizza. I'm a shareholder of Goodman Group. In fact, I haven't been mentioning which companies I'm a shareholder of. I'm a shareholder of Corporate Travel Management, shareholder of Goodman Group, shareholder of Domino's Pizza. And one of these companies did really well, and that's not Domino's Pizza. That was down 13.3%, but Goodman Group up 42.1%. So I'm a very happy shareholder of that company. Now the last two, Icandy. I'm pretty sure this has to do with gaming. And then Airtasker. Both of these companies did not perform well. Icandy down 50.9%, while Airtasker down 43.5%. So that's the last of the 30 companies. So quite a few companies performed really well. More companies actually performed fairly badly. I think overall 13 companies were up, 17 companies were down. So let's have a look at that group, the performance of this 30 companies if you did assume you took equal weighting to all 30 companies. So I just assumed that someone bought $1,000 worth of each of these companies. So that amounted to $30,000. And at the end of the year, not including dividends. So that's very important. There were some companies that did provide their shareholders with a dividend. So if you did include dividends, this portfolio would have been up for the year because it was only down by $208 or 0.69%. So if you did include dividends, more than likely the value of this particular portfolio might have been up very slightly. So I'm going to show you the performance of those companies that I chose, 19 companies, and we'll also be able to compare the performance of this particular group of companies to those group of companies that I did choose. Now, I've already done that, and I'm going to brag during my video because the group of companies that I chose performed significantly better than these 30 companies. So wait out for that video. And the reason, in my opinion, well, actually that's not the main reason, but one of the things I did choosing my 19 companies was I just used technical analysis. Those companies that looked like they were going to break out. Not all the companies did really well, but a few companies performed absolutely spectacular. So look out for that video, and I should be releasing that video on the 30th of December. So in 2 days from when you are watching this video. So that's all I got for today's video. Last thing I should mention, if you do have any thoughts, any suggestions, any comments, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a great day. Talk to you later. Bye.